That's great. So we go from, building public companies to something that's a little bit more esoteric, a little bit more mysterious, with John Koudounis, who's the president and CEO of Calamos Investments. We're going to talk for the next half hour or so, 25 minutes, on crypto investing. We actually talked a little bit about dinner with a few people on this whole topic of crypto. What does it mean? What is it? What is the future of crypto? If you're a little scared about AI, you're definitely going to be a little scared about crypto. But there are some good things, and there's probably nobody better equipped than John to talk about it. He's a regular contributor on the financial news networks and through Calamos Investments, which is a large asset manager investment company. They have figured out a relatively low-risk way, or at least a managed risk way of dealing with crypto. So Lisa Abramowitz's going to be back talking with John. Do we have John and Lisa? We'll wait till they appear in the doorway. Everybody good? Everybody having fun? Good. All right, I see some activity in the door. Here's Lisa. There they come. Great. Fantastic. Please welcome John and Lisa.
Hello. I'm here alongside someone who has been in this industry of finance for a very long time, has been the youngest CEO at Mizuho, also the first non-Japanese CEO, I believe, at Mizuho.
Yes.
And he currently serves as CEO of Calamos Investments, John Koudounis. Please welcome him. John, I want to start before we get into what we're going to be talking about, which is Bitcoin. Just your history with liquid alternatives and the idea of looking for alternative types of investments than just stocks and bonds.
So our firm that started just over 48 years ago by our founder, John Calamos, has always been innovative. And he's always been, a lot of people call him the father of convertibles. He's written a couple of books about them. A lot of the business schools, have them in their classes. And that's kind of the beginning of some of the alternatives. And we have phenomenal risk management at our firm. That's part of our DNA. We have great options traders. And if you look at just the inherent way that convertibles work, where you get about the majority of the upside, but you're capped on the downside, it protects you a little bit. That's what we look at, in a lot of the stuff that we do. And, we're proud to say in terms of liquid alts, we're the third largest in the world, right behind JP Morgan and BlackRock. So we're in good company given the size of our firm, which we're just over 46 billion. It's something that we pride ourselves. Our flagship fund is called Market Neutral, and it's convertible arbitrage mixed with hedged equity and merger arb. And that's something that delivers great returns, but it's solid. It's typically, in a given year, SOFR plus 350, something around that. And it's a 35-year-old fund. And it's been steady as a rock, and it's around 17 billion plus in size.
What hasn't been steady as a rock is Bitcoin. And a lot of people have the believers and the non-believers of whether this is a commodity, whether this is a currency, whether this is an instrument that has staying power. Can you give us a sense of when you realized that Bitcoin was going to be something that was important in your funds and how you develop your financial strategy?
Well, I actually set up a group within the firm to start watching Bitcoin about 8 years ago. And we followed it very closely, trying to figure out where this is going. And I have to say, I wasn't a true believer at first either. We needed to see how it played out. One of the things that really stuck with me was visiting Greece several years ago. And it was during the crisis. And there was capital controls in the banks. And so people would try to go to the cash machines and they could only take out like 20 euros. And this is sometimes if you had, it doesn't matter how much money you had in the banks, they had control of it. And when Bitcoin came out, and you can buy and sell it 24/7, you don't have to wait for the markets to be open, and no government or no bank can tell you what to do with your money. I thought that was pretty fantastic, and the fact that the technology is so advanced that they're using, blockchain for everything else. So we really need to study this, and it's gotten so big, $2+ trillion in size. And then when you saw, BlackRock and it come in ETF form, and that was, I think, January 2024. And right now, just in ETF form, there's over 190 billion in spot Bitcoin. So it's big. It's one of the largest asset classes. It's too big. You have to get involved. It's not going away. And they won the race. And when we're talking to everybody, it's not, are you going to participate? It's what's your allocation size going to be?
What is it? Is it a commodity? Is it a currency? Where does it sit? Is it a mitigator of risk, or is it a risk on kind of high beta type of trade? How does it sort of live conceptually for investors?
Well, that's the market. So if you look at our 80% protected, it kind of fits the same type of volatility as equity, right? Yet if you backtest the returns, our cap rates are, from anywhere, I think we're doing one today, it's going to come out anywhere from 37% to 44%, I think. Historically, your returns will be higher than equities have been. And you can also match gold and with our 90% returns in terms of volatility. And the 100% is more like a cash or a money market or really, really, really high-grade bond alternative. So you can increase the amount of your portfolio given those different buckets, keep your volatility the same or lower, and have potentially more upside in yield, which everybody's looking for these days.
People are looking for upside in yields. People are looking for a store of value. And I'm talking about people, individual investors. I'm also thinking about central banks. And we've heard a lot about how the Chinese central bank and many others have been buying gold and increasing their allocation to the commodity. How much are they considering Bitcoin also?
I think everybody's starting to look at it, and our administration is looking at it right now. They're having the government, the Fed's going to inherit what the government's confiscated from different, whether it be illegal or whatnot, but the administration's talking about adding to that, or at least taking other money and buying. And so when you look at that conversation of Bitcoin being part of the reserve, it's starting to take the same language as oil, your same language as gold, same language as uranium, and it's a commodity that's really, really, really precious, that's finite, and I think that if the United States uses that, they think that they can get better returns than some of the other things that are out there right now, and hopefully exponentially retire some of the deficit a little sooner.
One thing that people might argue who are not believers is that it's not a commodity that has any use, and that if it disappears, it's just an algorithm that's going away, and that if wallets are closed or whatever, it's not going to necessarily have that kind of quality. What gives you conviction that this does have staying power, aside from the $2.5 trillion? I mean, I'm just wondering, how do you know it's not going to become CDOs and CDO squareds with the basic foundation that disappears in a credit cycle where there is a sort of withdrawal of liquidity?
You can't take away the $2.3 trillion. That's proven 2.3 billion times. That's the number that is out there. The sophistication of the technology is way more advanced than any bank account that we have, than any wires that you can send. People are saying, hey, is it going to disappear? You're going to wake up one day, well, there's a better chance that your bank account disappears tomorrow than your Bitcoin account, by far, given the technology and the advances of it. And then there are people are saying, well, when we have this quantum computing and everything else, will they be able to break into that? Well, I think it's just going to get stronger and stronger as it gets larger. And there's a finite number, unlike gold, where it's a rare commodity, but we keep getting it for hundreds and thousands of years. We can keep finding some gold. Who knows if it ever gets depleted? This has a number. The institutional market is starting to adapt it in a big way, which I think is going to be the turbo button, and we haven't even seen where Bitcoin's going to go.
Not to get overly philosophical, but how much is the rise of Bitcoin and gold and frankly liquid alternatives coming in tandem with an increasing skepticism around the dollar as a reserve currency, around government bonds and exactly how they're going to perform over time, because the correlations between risk assets and bonds have broken down in certain environments? How much is that a direct consequence of what we're seeing in some of the more traditional markets?
There is a good part of that, right? I mean, I think that people want to be able to control their own destiny. Like I said, you don't want the government or a bank to tell you what to do with your money. I think the United States should be worried about being the reserve currency, and I think that that's why you're seeing a lot of countries, including ourselves and others, buying gold and Bitcoin, and that doesn't well for the dollar. But that's why this administration wants to lead in cryptocurrency, specifically Bitcoin, in order to get ahead of that and retain its power as the reserve currency. And I think that they need to, because if someone else beats us in this, they will definitely have the upper hand.
Do you think that it will ever be used as a currency, or is it really just a store of value, and the funds that you create are parts of a portfolio to mitigate some of the risk dynamics, or at least diversify in another way?
I think the latter. Can it be used as a currency? Has it been used as a currency? You hear about the one gentleman, I think, that bought a pizza or two pizzas for 10,000 Bitcoins. He wishes he would have kept them and not eaten that pizza at this point, given the value of where those are right now. That hasn't really seemed to take off. But it's morphed into something that's more of an asset class, one of the larger top 10 asset classes in the world right now. And I think that in itself, gives it its own life. Whether it becomes a currency or not, I don't see that happening. But it's definitely an asset class that's not going away.
You talked about, I know that you want to talk about something, I have to read this, an auto-callable ETF. I don't know what that is. You're about to launch it. Do you want to explain what that means?
Well, we actually launched a few months ago the first auto-callable ETF. So the structured product market has been a huge market, and a lot of for years it's been mostly for high net worth individuals, where a lot of the banks, including the bank that I used to work with, will go into a portfolio of some of these billionaires or whatnot and do structured products around them and callables to protect their downside and get their upside and whatnot and give them additional yield. And so this is an incredible product if you want income that's steady, that's very tax efficient, that's tied to the equity markets, that's not tied to duration or credit like in the past. And so what happens is we have a partnership with JP Morgan where they do our swaps every Friday. And there's a partnership with a firm called McCube that has the index. And so every Friday they reprice the mechanism. And as long as the market doesn't go down, the equity markets specifically closer to the S&P, and that's what this one is particularly pegged to, and we're going to bring out a NASDAQ one in the next month. As long as it doesn't fall below 40%, they will issue coupons, and the coupons of the index have been 14.4%. And so we've been returning around 15% on a monthly basis in a very tax-efficient manner. So there's a huge demand on this, and it's an ETF form. So now what banks used to charge 2.5%, 3%, 4%, you're getting for under 100 basis points, and it's liquid, and mom and pop can buy it now.
And you have this tied to Bitcoin as well, right?
I'm sorry?
You're launching one that's tied to Bitcoin as well?
No, so what we're doing is what we have called laddered products. And so the Bitcoins we launched every quarter, given where the volatility is in the market, the cap rates are different. And so once we had the full year, which we now have, in the next month we're going to do what's called the ladder product. So a lot of the advisors don't have to time the market. They could just buy a product that has equal weighting of every quarter in trailing. And that's what we're doing with Bitcoin. And we're also going to do that with these auto-callables as well.
So I am curious, you mentioned this administration, and we know that they've been very friendly to Bitcoin and Bitcoin investments. As a CEO of Calamos, how much have you seen your ability to attract capital accelerate since the change in administration with some of the new guidelines from current regulators?
Well, we weren't able to launch Bitcoin ETF with the previous administration. The SEC was so slow, and they would stop everything. They were not friendly for business. And a lot of people don't know, but the SEC in the past administration, they only had to go into the office 4 days a month. And a lot of people don't realize we've launched over 30 funds despite that, but it was like pulling teeth. It was very, very difficult to work with. Jan 1, or in the middle of January, when the new administration took place, the SEC started opening up, and we had been working with them and the Chicago Board of Options Exchange to do an index on Bitcoin. Without that, we wouldn't be able to launch this Bitcoin ETF. Our Bitcoin ETF doesn't have any Bitcoin in it. It just matches Bitcoin's performance. And the way we do that is we buy zero coupon treasuries out to 1 year, the year that we protected for the launch, where we launch it, and then we buy calls on the index, and then we sell out of the money calls on the index to raise money, so we can lock it in and protect the people. So we don't actually even hold Bitcoin, and you don't hold Bitcoin, but you hold a substitute that's engineered in order to perform and get the upside of the Bitcoin.
So this is kind of putting you on the spot. I apologize in advance. How much of your personal portfolio do you have in Bitcoin?
I have probably, I haven't really thought about it, but I have been adding to it straight. I usually invest in every fund that I seed that we bring, so I have it in our ETFs as well, but I have been buying just regular Bitcoin as well, because I am bullish on it. And, is it 2% of my portfolio? Is it 5%? I would have to check, but it's significant in the fact that I do believe it's important, and I think it's here to stay. And I probably would put more if I didn't, was so diversified in all the different funds that I invest in, our funds. So, but it's not for everybody, because it's volatile, and you don't want to look at the price every day. It'll drive you nuts. So that's why we were able to, bring some peace of mind to people that want to participate.
Just real quick here, going forward, you said that it's $2.3 trillion now. How big do you think this market's going to get by, say, the end of next year, or say in the next 5 years? What kind of scope are you thinking about?
It's going to be multiples of that, because the institutional market is just starting to participate, and once they do, and once the governments and the central banks start to buy as well, it's going to be really big. We were having conversations with all the major banks, Morgan Stanley, JP Morgan, to onboard Bank of America, to onboard our products. Well, we started talking about them a year ago when we launched. They didn't even want to have a conversation with us because of the word Bitcoin. And their boards and everybody said, we're not playing in that. I said, well, you guys don't understand. We don't have any Bitcoin. It just says Bitcoin, but it's matched to the performance of Bitcoin, but we're not actually selling Bitcoin. We're not storing it. We're not holding it, whatever. It didn't matter. They didn't even want to have conversations. Fast forward 6 months, and it's not that they don't want to have a conversation. It's like, you're on dock. You're going to be the first one. We want to onboard your funds. We're just putting it through the paperwork to a T, every single bank. That wasn't what we were hearing 6 months ago. So just think about all the major banks in the United States, let alone the rest of the world. Some parts of the world, like Asia, is very advanced, and Japan and Bitcoin. And the big funds, now they're looking at what the allocations are. And the Middle East, once you start investing in this thing, it's much bigger than retail, and retail's been carrying it now, as well as some other funds like Strategy, MicroStrat, Michael Saylor's and stuff, Strategies, like they have a huge holding, and we're also a big buyer of the convertibles for that company. So we're the beginning innings for sure.
John Koudounis, thank you so much for taking the time. Lovely speaking with you.
Thank
John
you.
Koudounis.
Pleasure.
Thank you so much.
Appreciate it.
Great to see you.
Thank you.